Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Sonal Bhutra, as well as Ekta Batra. Well, it is looking like a weak afternoon. No two ways about it. We opened higher. From there, we saw selling. There was a mild recovery from the lows, and thereafter, it was sold with full gusto. Now the Nifty is below that 18,100 mark. Yesterday itself, the high was closer to 18,500, and in just two trading sessions, we've lost over 400 points on the index itself. The bigger worry is the health of the broader markets right now. We have 2,600 stocks declining for just about 250 stocks which are advancing. So over the last few trading sessions, when the advance decline ratio was anywhere between 4:1 or 5:1, that has shot up to 10:1. 10 stocks advancing for just one, rather 10 stocks declining for just one advancing. And all of this while cases in China have risen. So this time around, China sneezed and India is the one which has got a cold.
Hi Manglam, hi Sonal. Yes, absolutely. You know, the markets are under pressure. There are only around 7 stocks within the entire Nifty space which are in fact in the green. And surprisingly, we've really shrugged off what the global markets did overnight, despite that enthusiasm for the US markets from the consumer confidence data. But like you mentioned, China sneezed literally. But nonetheless, the experts have mentioned that the big plus factor for India is definitely the hybrid immunity that we have, which is basically a combination of vaccinations as well as the natural immunity that we've had because of the exposure to COVID-19. So that is probably the biggest differentiating factor. Remember, till now, China has had a zero COVID-19 policy, and we haven't. So that's the big difference. Let's see. As of now, there's just caution, preparatory meetings which are happening at high levels. But is it trickling down in terms of numbers? Not yet. Not yet. Fingers crossed.
Yes, fingers crossed. And let's hope 2023 doesn't start in what could be a COVID scare. So yes, caution there. But absolutely, the experts have told us that there's nothing to worry about so far. And just about our markets, we are seeing that there is a sharp reversal, at least in sectors which are doing really well, be it the PSU banking space, be it the fertilizer names as well. And all the indices are in the red currently. So no green as far as index movers are concerned, but we'll see which way things go. It's the weekly options expiry as well today. Let's start the show with the first management on our show. Chemical major Galaxy Surfactants is in focus. The stock this year is down more than 16%. Centrum has initiated coverage and they have a reduced rating with a target price of 2,749 rupees per share. They're positive on company's expansion into green product segment and a lot more. To discuss how the next year is likely to look like, we're now joined by Natarajan, who's the Executive Director and Chief Operating Officer at the company. Mr. Natarajan, good afternoon. Thanks a lot for joining us. I wanted to get a check on how demand is on the ground in both your domestic and export markets as well. And has there been a sharp reversal in raw material prices as well? Quarter 2 saw a decline. Have you seen further pressure on them?
Hi, good afternoon. Thank you for having me on the show. Oh yeah, so raw material prices have declined since last 3 months, both the natural oleochemical feed value chain as well as the crude petroleum. But yes, we see it sustaining, and then we need to wait and watch with the current headwinds in China, whether commodity prices further get impacted. But yes, we have a good, robust risk management framework in place to ensure that we're able to manage the commodity risk pretty well. As regards the outlook for next year, yes, we are aspiring to grow ahead of the market. We still want to be keeping to our guidance of 6 to 8% volume growth. Europe is certainly lagging. That's very clearly evident for almost all companies who are doing business with Europe. US is holding well. India is a bright spot for us, and for many others as well. Africa, Middle East, Turkey has been a bit of concern in terms of the way the volumes degrew in the first half of last year. We do see some green shots in the last 2 months. We would hope that that particular trend continues and the momentum gets maintained, so that we're able to start reversing the degrowth trend in the Africa, Middle East, Turkey market for us.
Rajan, you said 6 to 8% volume growth. That is for the entire year, or what period is that?
No, we're talking about next year. So this year we probably would be ending flat or a little bit on the negative side because we reported almost 3.5% volume degrowth in the first half of the year.
So flat on the negative side would mean that you have further downgraded your volume estimation. I mean, you started with the earlier estimate of 6 to 8%, then curtailed it down to 2 to 3%, and now you're going down to flat or negative.
Yeah, see, 2 to 3% for the, we're looking at for the second half. So that means that we need to be able to get our first half degrowth also taken care of in the second half. But the way we are seeing things, we probably should be on the flattish side for the full year.
Okay. Mr. Natarajan, I wanted more color with regards to any kind of disruptions that you're seeing on the ground when it comes to the situation in China. I know that it is very preliminary. Companies want data, which is probably for, maybe the next 3 to 4 weeks to assess whether or not there is any kind of tangible impact. But what can you share with us at this point?
No, we are seeing no impact because our supply chain is not exposed to the Chinese from China. So we do have a resilient supply chain as far as some materials that we source from China. We are not hearing much. We are only talking based on what we see in the reports. We probably need to wait for another 2 weeks to understand whether there's going to be any significant disruption in terms of doing business in China. That's something that we need to wait for at least next 2 weeks.
But do you see it to be temporary in nature, not similar to what you probably what we saw at the start of COVID-19? The situation might be different?
It will be different because I think everyone is prepared well now because when we did have the initial outbreak of COVID, none of us are prepared, but people are more wise now and the governments know what to do. And I think things would be much better managed in terms of what are maybe the implications. We do hope that, it settles down quickly in China and then we are back to business as normal.
Okay, that's the hope. Mr. Natarajan, in that case, you have scaled down your volume guidance further. What about EBITDA per ton? The earlier guidance was 16,000 to 18,000 rupees per ton. You have spoken about raw material prices coming down further. With value-added products going higher and raw material prices coming down, what kind of EBITDA per ton can you guide for in this year and the next?
So in this year, we will be, we have guided already to about 21 to 22,000 rupees per metric ton. And we should be delivering on that. With regard to next year is only thing, given the current external situation that we are in, I would like to only make a clear statement that EBITDA growth will be ahead of the volume growth and our long-term guidance is for a 6 to 8% volume growth and EBITDA growth of 16 to 18,000 rupees per metric ton, closer to the higher end of this band. Okay. But yes, our EBITDA growth will always be ahead of our volume growth. That we are very clear and we have been delivering that for the last so many quarters.
Oh, yes. What is the percentage of value-added products as a percentage of revenues? Are you looking at increasing this pie going from here? And Centrum says that the outperformance that we saw in FY22 will taper down a bit in 24, that is. Do you concur with that statement as well?
No, that essentially probably the commentary would have concluded based on, because our specialty ingredient market has a good amount of exposure into the developed markets, that is the Europe and the US. So with the Europe economy not doing that well for reasons that all of us know, that can be an indication. We do see that there are good amount of traction happening on projects in pipeline in our developed markets. We don't see that as a major concern now, but yes, we would only expect that Europe improves from here on, and US, although we do see some cause of concern, but there's nothing compared to what it is in Europe.
Your capacity over the last few years has increased by 50% from FY16 to now, if I look at it, close to around 44,000, or rather 4,42,000 metric tons. What are your expansion plans from here on? What is your current capacity utilization?
We are about close to about 68% capacity utilization. And then we are expanding into both the performance surfactants and the special ingredient segment on products where we are touching close to almost 80% capacity utilization. We have almost capex lined up for close to 150 to 200 crores in the coming year. There's some that will get commissioned in the early part of next year, and some that will get commissioned towards the end of the next financial year. So our objective is to ensure that we are able to have capacities well ahead of the demand growth that we foresee. And yes, we do see things looking up pretty well after the initial challenges we are going to have, which we have been having in the last 6 to 8 months. Things are going to certainly look better as we move forward into the next financial year.
Okay, can you leave us with maybe some color with regards to geographies such as Egypt, which were facing some issues?
Oh yeah, so Egypt, with regard to the significant devaluation that happened of the currency, there has been a significant hit on the demand. And as it happened in 2018, when a similar devaluation happened, it takes almost 2 quarters for the local demand to, the local demand to then start getting adjusted to the inflation scenario. So we do see that things would start looking up much better for the local Egypt market, say 2 quarters from now for sure.
Okay. Mr. Natarajan, on that positive note, thank you so much for joining us. We would like to wrap up now and wishing you and the team at Galaxy a very happy new year.
Thank you so much. Happy New Year to all of you as well.
Thank you. All right, that's the word coming in from Galaxy Surfactants. For now, we'll slip into a short break. Up next, we'll be joined by Prabhakar Tiwari, who's the Chief Growth Officer at Angel One, to discuss their November business update. Stay tuned.